right, everybody. How's everyone doing today? Everyone doing okay? So I'm going to show my screen now. Let's see, here I am. Oh, maybe this is me. Okay, TGIF, everyone. So I just want to give an example of when correlations are great. Hi, Dennis, how you doing? Yeah, Joshua. Yeah, Paulie's definitely a great asset. Good, Dennis. So here's when correlations stop working. Earlier in the week, I was looking for shorts in the yen, really based upon that I thought yields after the Fed, and this is the second Fed meeting in a row, that if you sold higher yields, it came off. So, that's what happened here, and that's what's happening here. Pretty good sell-off from the Fed. Are we going to hold here? This was a pretty strong move. Maybe it's got 294 in it. But normally when this happens, you would have seen some kind of pullback in yen, US dollar yen, or I guess the yen decided to hook up with stock indexes and the flight to safety and the FANGs. And but the yen, definitely we had a throwover out of a rising wedge. This was the rising wedge, and this was yesterday's action from here, these two candles here. So I don't know who's left short, but we are still diverging on the 4-hour and on the day, and I certainly can't reach and get long here, so I'm fighting short positions. I think it's possible that this is a 1, 2, 3, but we need some negative action. I would say your first clue that there's something going on and maybe the end's going to start coming off would be back under this high, 1317. Okay, that's going to be your first clue if we start trading under this previous top. Then you're going to want to see some action, and that would take it back inside the wedge and maybe even back to this wedge line. So I know it doesn't sound reasonable here at this point in time, but if you got something like this, so 1.618 of it, you got possibly 108. So sticking my neck out a little bit here, thinking that we could be looking at a significant high in the yen, especially if yields are going to continue to come in and the yield curve begins to invert. And what's interesting about this week, and it's doing it pretty quietly, is we're on the verge of a 2-week reversal in the S&Ps. So I teach, it's a real simple method, but it's interesting. It's pretty powerful. You go back 2 weeks on the S&P and you look at the close, and the close was 2904. And if you write down these numbers and use them, every once in a while they turn out to be trading opportunities. How about this low? I'd say that's pretty close to the off number, and you got a nice little pop if you traded it. And its main use is to identify 2-week reversals. Now you could use it on any other time frame too. Okay, I use it mainly on a weekly, and like I said, you'd be surprised how many times with the market's memory, it'll come back and test where it closed a few weeks ago, and sometimes you get trades off of it, like you had here. Okay, so you said, well, 2904 is important. You see it there, you buy one, you use a reasonable stop, and in 8 hours, you have 23 handles. So that's going to be an important close in the S&Ps. NASDAQ has become the relative strength leader, but its 2-week off number, it held early in the week too. It was 75.40, so we're still 40 points away from having the NASDAQ reverse. It's still possible, it still did not make a new high, very close. Will we? This could still be a failing rally. I bet it was close to 88.6 back of this. So we'll see, but this is definitely the strength. And, you know, I've been making fun of what I heard on CNBC that, you know, when the market was selling off on trade war fears earlier in the week, people bought the FANGs as a flight to safety. And, you know, it's amazing at times how both being naive and greedy works pretty good in the markets. You ever been there, been naive and greedy and have it work for you? 1350 bear your options. Okay, they got blown in Asia. Okay, so the writers, Nitish, and the call buyers they expired worthless, exactly what the house wanted. Is that what you're saying? Hi, Bando, how are you? Joshua? So earlier in the week, I said I thought gold could pull back. I've been talking about this for a while, even I think when I was out with pneumonia. Thought gold could pull back 61.8, which it's done. All right, that was 1181.02, and talked about silver having a much better look to it. It was further along. So although gold, you know, again, trade selection. So who's better off? People that bought the break here at 81, or people that, you know, got long silver on this pullback? Silver's putting in a decent day. In fact, it looks like it's rounding out. What kind of week is it? Obviously, not, you know, nothing to write home about, but at least it's 2 up weeks in a row compared to gold having a real bad down week. Looks like it, you know, eventually wants a challenge here. I was thinking that maybe silver will do it. Still nothing here short term, but that we'd get some type of low like in here, you know, and then maybe have one more of these from down here that could take us to 1230 or so. But the preferred long, based upon what I see, is in the silver. So I hope everyone had a great week. And, you know, we're coming into October, and you know, we're in fall now. We had the equinox last week, so get ready for October and take us up on this and put these guys' eyes and ideas in your corner on any device. Try not to run red lights on our traffic light page. Look for a confluence with all the different types of analysis we have. You know, we have Gregor's Elliott Wave and Andre's Harmonics and Blake and Steve Candlestick and Stelios on its macro. So if you're getting an advantage of coming into face every day, I would say, and you feel like you want to thank us, it's easy. Also, you know, we have the chat room and Amanda running it and Joe in there. So the best way to thank us is just to click the link and get a good deal this weekend. The weekends are a great time to become, you know, do anything new, because besides college and NFL football, which does dominate some of my time on the weekend, I look at my charts a lot on the weekend. And, you know, and I'll get set up later on. I look at, on Sunday, Blake's Look Ahead, where Blake provides tomorrow's potential newspaper there. So this goes to the 30th. That means it's over Sunday. So just in case you get busy during the weekend, don't procrastinate and click our new season offer right here. I'm already active. I'm in there. Okay. So I want to thank everyone for their attention this week. Hope that we have added value to what you're trying to accomplish on your mission as a trader. And I'm going to turn it over to Blake and see if he's as tired as I am on Friday. How are you, buddy?
You do sound a little tired. I mean, you have every reason to as well. So,
Yeah, I'm a
good
little
morning,
bit tired.
Coach.
Hey, buddy.
I bet. I bet. Well, you know, it is Friday, so thank goodness you got the weekend to recover. And yeah, I'm sorry, you were going to say something, Dale?
He's already fallen asleep, maybe.
No, great call on the dollar this week. It was the call of the month. I mean, you know, you were talking about how a lot of people were leaning the wrong way in the dollar. You were talking about your feedback you're getting from Jello. Is it Jello or Gelos, or your Gelos, the fund that you trade for, and all the real good traders there, they weren't buying into the euro being good, and you warned, you showed the box before we broke down. So I don't think anyone that was listening to you got caught on the short side of the dollar, long side of euro. Blake, nice job, man.
Thank you. I'd like to hope no one did. And you know, these Italian issues are really, you know, resurfacing. And I tweeted out a chart this morning, which I think is really important. You got the S&P, which is at a very big inflection point. I mean, buyers are going to come in right now. I mean, this is the time. I'm not saying that you should be long necessarily, but if you were going to be long, this is the time to do it. Now, problem is that with Italy's issues coming to the forefront, I'm not sure if this is the time to do it. But again, from a risk reward perspective, this is the place you want to be long. But we have this, you know, we've been talking for it seems like, you know, the last couple months, this but at least the last few weeks, this ascending wedge in the S&P has been, you know, just grinding higher, and we are really testing the support level. So as you can see, I have an alarm set, you know, below 2,900, which is, you know, approximately 5 S&P points from where we're at. That's when things get a little dicey, and I think if we close below 2,900 in the S&P today, that's going to be an issue for the stock market. Now, and then you got some of the.
It would also be a monthly reversal, just macro stuff. That would we took out August highs, and we'd be lower on the month if that happened.
Yeah, I guess. Let me see something really quick. I'm going to look at a chart that that I haven't drawn all over. This would be the S&P. I guess if we did close, you know,
under 04.
Yeah.
3.
Yeah.
In there. Anyway.
Somewhere. Yeah, somewhere around there. You know, and I think the market is vulnerable after such a big move. You know, this is a monthly S&P, and you can see the divergence that we've seen.
Yeah.
On this last move higher. Look at the S&P on a monthly basis on relative strength.
You got it on the weekly too. Almost everywhere, Blake. Weekly, it's glaring. I mean, it's under 70. See that?
Yeah. That's crazy. So I think the risks are for a correction here, and it's not just the S&P too. There's a lot brewing. One of the bigger things that I'm looking at that if you look at the ForexAnalytix community, this is by the way, this is our chat room where we're at, and I'm at here most of the day. Unless I'm in a meeting or on a call or something, I'm usually here. But this chart I think is pretty important. This is the 10-year, and look at the bonds, how they've reversed higher, and look at how we have a potential break of previous support that is current resistance right now. But if the bond market rallies here, we got a big double bottom in the 10-year, and if you got bonds rallying like that, and that to me would signal that the S&P is ready to come down. So that's something that I think everybody should be looking at right now. See, there's our chat room. I'm gonna go ahead and take it off here. But that's a big deal to me. Not just, it's not just the S&P. And by the way, the S&P is hitting new lows as we speak. And I, you know, while we're looking at it, we should probably take a look at some of these markets. I mean, you know, if you look at, and I know I'm focusing on equities right now, and we have just about 12 minutes until Canadian GDP, which I'll be here covering with you guys live. But let's take a real quick look at, and here's the Dow, failure at the highs, and that's a weekly chart. Let's go over to the daily chart. Failure here at the highs. NASDAQ has not made a new high, which is concerning, you know, and you got Tesla that's going to be down 12% at the open right now. Pre-market, it's trading down 12%. So, you know, that's weighing on the U.S. equities. You got the Russell 2000 has been really underperforming. Okay, if you've kept an eye on the Russell, the DAX really underperforming here, big head and shoulder pattern. If you do the analysis or watch the analysis of ForexAnalytix, we do analyze the DAX. I mean, the DAX has this big head and shoulder pattern and big rejection of this descending wedge, and the neckline comes in. You know, it's pretty far away. I mean, it's another 400 points before we get there, but still worth noting. You know, French markets aren't rallying. The Nifty 50, you know, rolling over, underperforming here too. And here's the UK markets, you know, underperforming as well. So I think you got to keep a real close eye on these equities. They look vulnerable, and the question is, what does it do to the FX market? And one of the things that I'm watching today, and you just pointed it out, is this yen. The yen squeezed a lot of people, and I'm going to admit that I was one of the people that got squeezed in the dollar yen shorts, which really was upsetting to me because I made good money in the dollar Canadian, and I gave most of it back yesterday. I actually walked away positive, and so, which was good because, you know, this is my end of month, so I'm kind of more sensitive to my P&L at the end of the month versus, you know, most things. I like a lot of that's why end of the month is a big deal in the financial markets, because most of us, we get paid at the end of the month, or, you know, our P&L, it matters at the end of the month. Beginning of the month, we've got some time to be a little bit more aggressive, but you get towards the end of the month and, you know, you got to be a little sensitive. So like the dollar yen blasting above those highs, I couldn't risk too much. So I got stopped out. But the risk here is if, you know, stocks look weak, and if this dollar yen breaks back below 113.20 and closes below there by the end of the day, that's going to end up being a false breakout. And that is a risk right now, because as I showed you with the bond market is rallying. That means yields are coming down, and if yields continue to come down, you know, the dollar yen is at risk of a bit of a reversal here. So, and like I said, stocks do not look super duper healthy at the moment. So it is it's possible here that we stay, you know, below these levels. So you know, just again worth watching, especially that we're approaching these the support here. I think if we break through like the 113.30 level, it's likely to trip some stops here. Dollar Canadian is under pressure going into the Canadian GDP, which I will cover here live. Now I'm thinking that we do come down to the 50% retracement, which is going to be here at 129.84. I think that's where we're going. However, you know, you're going to have to just pay real close attention to the data that we have coming out, and if Canadian GDP is stronger than expected, and by the way, here's what we're looking for Canadian GDP. We're looking for a rise month over month of 0.1% versus prior reading of 0.0%, and year over year it's supposed to come in a little lighter at 2.2, but if those numbers come in stronger, the dollar Canadian is probably going to drop towards that 129.84. But I would very much caution on getting too bearish the dollar Canadian at this point. And the reason why I say that is because NAFTA still seems very much a, wow, gold, silver is ripping. Good call on silver this morning there, Dale. Silver, what was I going to say? Oh, I'd be careful with being short the dollar Canadian, especially with this NAFTA agreement not set in stone. It seems like, Canada, well, obviously on the 30th, I don't think Canada is going to be a part of NAFTA. So because of that, I think the risk still is skewed to the upside. That means weak Canadian, a weak Canadian dollar. But as you can see, stocks are getting tripped right now. So ahead of the data, which is coming up in 6 minutes. All right, 6 minutes. We have this data coming out. Hold on, I need to adjust.
Blake, let's remind ourselves that we also have. Good morning, by the way. We also have core PCE out of US and personal spending as well. So.
Yes, we do. We do have core PCE, and this is some of the Fed's favorite inflation data coming out. So good call, Stelios. We have to definitely pay attention to that. So how are you doing today?
I am very well. We have some very adverse weather in Greece here in Athens, and all the schools are closed, so I have my kids with me. But otherwise, all good.
The joys of working at home. So now, what do you make of this euro? I mean, it's really come under pressure, at this point.
Yes,
so what do you make of all?
This Italian story scares me, I have to say, because what I'm hearing from Di Maio and the government is very similar to what we were hearing from the Greek prime minister who took over 3 years ago, and things didn't go well. So when I
Greece
hear
is
this,
fixed.
Oh yeah, it's fixed, by the way. Yeah, of course. No, it's not fixed. Okay, but when you hear politicians talk about the deficits and all this stuff without really showing any degree of what's the word I'm looking for, of prudence, then it gets really scary. So they're saying what the people want to hear, and Di Maio specifically was very aggressive towards the EU. He said, "Oh, enough with these scare tactics," or however he said it. So my conclusion, and I shared this on the chat room with everybody a little while ago, is that I don't think we are any longer in this kick the can forward mode. I think this is a bigger thing that is likely to keep going. And I said at the beginning of the year that I thought the euro was probably going to underperform, and I stand by it. And although it hasn't done badly over 2018 so far, it's gone sideways mostly. I think this is the beginning of a move down, in my opinion. And it's not just against the dollar. I think it's going to underperform in general.
Yeah, I mean, the euro is actually, and it's done really well. I mean, if you look at, the euro against the yen, and I got to take a look at a longer term chart here. I mean, the euro against the yen, we've had a really nice rally. Actually, we failed at this big confluence that we've been talking about here at the 618. But if you look at the euro versus the Aussie, the euro versus the New Zealand, I mean, these have been massive moves. Even the euro against the pound. I mean, the euro against the pound in recent years have been, gangbusters. I mean, the risk of the euro pulling back on a more broad basis is I think kind of high right now, and I think you got to be a little careful. So we have, just in a couple minutes, we have Canadian GDP, and as you can see, Canada or the Canadian dollar actually just took out some stops. So what I'd be looking for, and this is just an intraday chart, this is like a 5-minute chart, so I want you guys to bear with me here, but this is what I'm looking for, is really if we get a move above 130.20, then anybody that was short is going to get caught short. So this is this would be in the event that we had some weak Canadian data. Then I'd be looking for a reversal here. I am looking for us to find some support, even on a strong number down at the 129.70, 129.85 level. So somewhere in this neighborhood, I would expect the dollar Canadian to find support. I sure as hell would not want to be short the dollar Canadian or long Canadian dollars going into this weekend, knowing that you know, this NAFTA deal is just not going to get done. So I think you got to use these sell-offs that you're seeing here as opportunities to get long. However, you know, with the data coming out here in just a minute, there's obviously a little bit of risk. Now, I'm going to leave this calendar right here because I don't want it to get behind what I'm looking at. I have to keep it a little bit over on my screen.
Remember, the Dixie is a new VIX. Okay, you know, VIX looks pretty good, but you know, maybe the pressure we're getting in the market is a strong dollar. Obviously, strong dollar, emerging market pressure spill over here a little bit. So, yeah, I don't think that the market's like a strong dollar. Like,
yeah, no, I don't think so either. And so we'll pay attention to personal spending right here, personal income. These numbers matter today as well. And the data is coming out in 20 seconds. So stand by, people. And there's PCE. So keep an eye on all this data coming out. This is a Bloomberg terminal, so this data will reflect here probably faster than you're going to see anywhere else. So heads up.
Okay.
Canadian GDP is stronger, so the dollar Canadian did spike down. Okay.
Core PCE at 2% year on year, as expected.
Yeah, and real spending was. Go ahead.
No, I was going to say raw materials price index in Canada very, very low. Do you see this? Is this print right? Minus 4.6%.
It is. Yeah, it is right. That's a really negative negative trend for that. That's, you know, leading the inflation data.
I wonder what seasonality or what leads it to have such a big swing. It's very.
I don't know.
I don't know.
I don't know. Let's see here. I can pull up a chart. But yeah, look at that print, man. That's ugly. But you know, it's not like out of the norms, at least not right now. So the Canadian did. Let me move this really quick. Let me get it out of the way. So the dollar Canadian basically spiked. This is to the this dotted line you can see here. This is the previous support. And you know, if we found some support here, Stelios, this could also end up being a little bit of a big inverted head and shoulder pattern going the other direction. If we end up, you know, finding support at this 129.70, I think we went as low as 74. And you can see, let me get rid of this. This is kind of where we're looking for support to hold. So let's see if the Canadian can hold here. And you know, I played this thing to the long side earlier this week, and it was great. It is trading very heavy right now, but I'm gonna say you got to be a little careful here as far as being short the dollar Canadian into the weekend. But it has been trading heavy all day. Now the dollar, let's see, the dollar is pretty much mixed here. The euro's not doing anything. No one wants to pick up the euro. The dollar yen has found a little bit of a bid here with some of the U.S. data. I think you know, and one of the calendars I like to look at personally is right here. You can see the PCE. It actually came in weaker than expected. Personal income's a little weaker than expected. And the reason why you've got like the dollar yen, I think, bouncing, you have equities bouncing a little bit, is because people look at the data and they say, well, it's, you know, it's relatively weak. So if it's relatively weak, the chances of the Fed not being too aggressive with tightening is higher. So that is helping the dollar yen push higher, okay? And it's helping the S&P bounce off this really critical support today. You can see this is such key support for the S&P, and we're getting a foothold here. So we're finding some buyers, and I think for right now, that's kind of saved the market at the moment. So the euro dollar is not doing much. We might get a little bit of recovery, but anybody that's looking at the euro right now probably doesn't want to be long the euro So you know, if you're long the euro right now, you're probably thinking, okay, I need to get out of the euro, and I'm just looking for an exit at this stage. So any rally, I think above 116, maybe to 116.15, 116.20, you're probably going to find some sellers here. Cable's trading heavy. We are below the 38% retracement in the pound. So that's, you know, that's not too bullish. If I was long the cable, I would be a little concerned that we're below that 38% retracement. We're probably going to trade back to 129.50 at this point, and it's not even getting any type of lift whatsoever. Here's the Aussie. The Aussie's mixed. Kiwis a little mixed. These are holding up relatively well, I have to say. And let's go to this Canadian. So this Canadian.
Blake, we have to remember also it's month end today, so we will see some flows which don't make too much sense. I guess Monday is going to be a better indicator on how, you know, how things are going, both in equities and, you know, the main pairs.
That's true. I wonder, you know, I wonder how much of a bounce we're going to see off of the S&P, off of the support here, if the market can really, you know, piece it all together. Gosh, I would not want to be short the dollar Canadian. Actually, I'm going to be buying some here in just a minute. So just, sorry, I'm just kind of paying pretty close attention here. I wouldn't want to be on the short side of this. I'm actually, I want to see some sort of intraday reversal and think about getting long the dollar Canadian at some point is what I'd like to see, what I'd like to do. But I'm standing aside right now. Swissy, oh man, what a great move the Swissy's had. Now the Swissy actually pushed right up to previous support, acting as current resistance. It's the 78% retracement. I think if the dollar yen rolls over, the Swiss franc is going to roll over too. I'm surprised the Euro Swiss hasn't taken more of a nosedive. I mean, it's fallen, but you know, I'm surprised that the Swiss franc hasn't gained more traction, and the dollar Swiss hasn't, you know, reversed even further than it has as of right now. Let's see, dollar yen. Dollar yen's having a hard time just getting a bounce. I mean, we bounced basically 10, 11 pips, and now it's just kind of starting to flounder again. And if I look at the S&P, for example, this is a pretty shallow bounce thus far. So anybody that was short, like in European trade, you know, they just kind of covered up some of their shorts, but you know, there's no fresh buying coming into the equity markets, which is a little rare. You would think in North American trade you get a bigger lift than we've seen, but you know, the Dow very small, NASDAQ still trading really heavy as well. Stelios, did you have anything that you specifically were looking at today?
You know, Blake, you know, well, you talk about, Stel talked about it being, you know, month end. It's also made me think it's quarter end, right? And it is unusual for stock indexes to have kind of a soft, sloppy week, because money managers, you know, they show quarterlies, and they're going to want to show that they've been in the right stuff the last 3 months. So it is kind of unusual to have softness into both month end and quarter end.
Yeah, I mean, go ahead.
Go on. I was going to say, no. I think it actually depends on the quarter. You know, it's all about rebalancing portfolios, and it's not always the same way. So what I've found over the years is that you know, month end and especially quarter end can bring weird market moves which don't last. But I don't personally, I don't think there's a specific direction to them. You know, it's not always stock bullish or stock you know, bearish or something like that. So you know, just what I think. I mean, other people might disagree, but I just say usually when I look at markets, month end and quarter end, like you correctly said, Dale, I just tend to try to ignore the price movement on that day and see how it continues afterwards.
Good tip, yeah, that's a pearl.
Yeah. You know what I was doing, I'm sorry, you know, going off the subject of month end, quarter end, and that's some really good information, Stelios. You know, I was reading some of most of the month end reports that I was reading from the banks are, you know, saying it was fairly muted. There's not a lot of change in, you know, aggressive dollar buying or dollar selling going into quarter end or month end. But that doesn't mean that we won't see anything. But leaning off that subject, I actually want to take a look at the euro again, not just against the dollar, but against some of these other currencies, because the euro yen, as you can see, the euro is actually trading heavy. I mean, we're basically on our lows on the euro dollar. So if you're, you know, trying to sell dollars right now, the euro's actually we're just a few pips from lows at the moment, so you got to be a little careful here. I wanted to look at some of these other euro currencies like the euro yen. I mean, the euro yen is approaching 131. This 131, and you can see it right here. This is this little dotted line. There's going to be some stops below there, I believe, because a lot of people have been sucked into the euro yen long over the course of the last, couple of weeks, and we've seen this really nice bull flag pattern. We've seen a really big rally in the yen pairs. This might actually change the tone a little bit of the yen itself. If you start to get some selling in the euro yen, this is going to be the most actively traded currency of the yen pairs next to the dollar yen itself. So if the euro yen starts to break through this 131, you got to be a little careful with the yen in general. Look at how weak the euro Aussie is. It's approaching, this is channel support, but the euro Aussie has been just absolutely gangbusters as of late. But this little failed breakout up here, you know, we could really lead to some euro weakness. Euro New Zealand, this is well we're actually testing that 175 level. This has been a big this was a big breakout point on a weekly basis, and you can see we're kind of attacking that support right now. And then the euro pound, this is one I've been playing to the long side, but I'm very reluctant to play it to the long side at this point. By the way, the dollar Canadian is getting a little bit of a lift. I did pick up a little here at 80 while you were speaking, because I want to see if we can bounce back up towards the 130 level. Again, with the NAFTA risks looming, I'm not sure if you really want to be long the Canadian currency. There were some flows coming in following the data, but I don't. It was some stronger Canadian GDP data, but remember that's all those stuff in the rears as well. So the Canadian buying might be a little different. Now, hey, Stelios, one of the other things, I know you focus a lot on precious metals, and actually silver and gold, I really chose not to, thank God I chose not to buy. I tried to play silver on the long side earlier this week when we were trading above 1435. I got myself out actually as it dropped back through the 1435 towards 1432. We're kind of back up at those levels again, but silver is starting to outperform gold a little bit. So when you start to see the silver market outperform gold, what does that tell you about precious metals typically?
Well, it's usually the case of precious metals moving up together, basically. So it's bullish for the sector overall.
Okay.
Yeah, but it's interesting you mentioned silver and gold. I'm long silver, and I'm actually just about breaking even now. And it's a really strange thing. It's one of my biggest conviction trades, and it's been struggling. And I've had long discussions with people about it, and why I think it's going much higher in the medium term. And I've said this before in the webinar, but it's always worth pointing out again that there are a lot of reasons. There are many reasons why precious metals move short term there are many parameters that move precious metals in the short term. One is real yields, because precious metals don't have a coupon or a dividend. So what's your opportunity cost compared to other assets? So when you see real yields going higher, that's bad for precious metals, and when they're going lower, it's good. So that's one thing that has a short-term effect on precious metals. Another is dollar performance, because they're dollar denominated. When the dollar strengthens, precious metals suffer. But these, and other things, other factors. But these are all short-term factors, in my opinion. And when I look at precious metals, and I do trade them with a medium-term view. I've had this long in silver now for a few months, so it's not something that I could go in and go out straight away. When I look at the medium-term view and why I think it's bullish, it's for me, it's very simple. The things that determine the price of gold and silver is one is supply and demand, as with every asset, and supply and demand for both gold and silver. Well, supply, they're extracted from the ground at a pretty steady pace, and as the years go by, it becomes tougher. We know that for sure, and it gets hoarded a lot. So supply, you could say, is constant, maybe even a little bit declining over the years. The question is demand, and silver in particular, being an industrial metal, there are arguments. People say, oh, silver is getting used less because devices are getting smaller, which is it's true. Like phones and PCs and whatever else has silver in it. It's true, but the number of machines that get sold, it keeps going higher and higher. There are more mobile phones today than there were 10 years ago. So I think supply and demand in both silver and gold are steady, or more or less steady. So what do I think drives the price? And I've said this many times. I think the price is driven by the amount of credit and the money and credit supply in the world, because it's an asset denominated in dollars. You have the US generating a $1 trillion deficit every year. Sorry, you were going to say something.
Well, no, I was going to say, well, that brings up a good point, because if we're in a situation where the dollar is set to rise, let's say dramatically, and you have the euro dollar that's let's say the euro pushes back towards 110 over time. So, over the next few months, the euro dollar pushes back towards the 110 level. What does that do to gold and silver if it's priced in dollars? If the dollar continues to rise, do precious metals go down in value?
Well, yeah, I mean, the short-term reaction, you will see flows as the dollar rises. You will see flows going out of precious metals. You will see that, but that I always maintain the opinion that this is a short-term flow. You might see a little bump because of dollar strengthening, and we're talking about euro dollar going to 110. Let's say that's like 5% move. It's not it's not a huge move in the grand scheme of things. Silver can have 5% move in a day. So I think if the dollar strengthens, then for sure in this very short term, you will see precious metals being sold. And you know how it works. We see these big sell orders coming in, just smashing them. These will happen. They always happen. But as long as $100 15 years ago, compare that to what they buy you today, it's a completely different thing. You can't have, because of the expanding monetary base, you have to have these real assets rising in value in line with that, unless something changes in the supply and demand. It's as simple as that.
How about this week, Stel? I mean, we had a very strong dollar. Take a look at the weekly candle in silver. It's having a great week in the face of a strong dollar.
Yes. On the other hand, we've had some bad weeks for the dollar, and precious metals suffered. The last couple of months we had that. So I think these are, again, this is no. I agree with your point. In the face of a weakening dollar, of a strengthening dollar, silver is doing well, which is a good sign. But I think overall, this is more noise for these assets. It's a very tricky thing, and that's why I never ever trade silver and gold with a short-term view, because anything can happen. Really, literally anything can happen. So, that's my view on precious metals, and it won't change unless I see something material happening in the way the supply and demand the landscape of supply and demand changes.
Hello. Hey guys.
Good morning, Steve.
Hey.
Another proof that there is an issue of supply and demand, and that the prices of those two metals are anyhow the very low side, is the fact that if if you've watched, for example, how many mergers we've had in miners, it's not by accident. It's because they need economies of scale for the price to make sense in actually
Great point.
mining the metals. For example, just what was it, a few days ago that we had Barrick Gold and Rand Gold merging. This is the result of such price pressures, and we know as a fact that future plans and investments in mining have already dropped, which means that when at some point price starts going higher, the supply won't be able to catch up, at least for a period of time, and that will help price actually move even higher than that.
Yeah.
Right. Well, good. That's a good. Those are all valid points. So, and silver's got a big. I mean, there's a lot of support down here for the silver market as well. So, it's going to be interesting to see how if the dollar does continue to rise, if precious metals, catch a bid as well. And usually that, for me, that's a showing of risk aversion, which, if you look at the bigger markets too, and like the S&P, I mean, we're close. I think we're really close to showing a near-term top, which doesn't mean the S&P is going to 2,000 or 1,500 anytime in the near future, but even a couple of months of a move back down towards, let's say, 2,700 in the S&P from 2,900 could really put a bid under the dollar and under precious metals at the same time. I picked up the dollar Canadian a little earlier here at 80. It's starting to show some life, and I think if the dollar Canadian gets back above 130, we are going to start to squeeze some of the intraday shorts. All the people that had just shorted the dollar Canadian due to a strong GDP number, they're going to get squeezed if we get back above 130. So just keep an eye on that. Steve, are there any charts that you wanted to show going into the last 10 minutes before Dale brings on his guest?
It depends on what you covered, because as you know, I was in a meeting, so I really have no idea. I mean, I caught you from the part that you covered the Canadian data, but I have no idea what you mentioned prior to that.
I looked at some of the majors, and then I looked at some of the Euro crosses as well. So we were looking at just how much of a run that we've seen in a lot of these Euro crosses, and how we're testing some pretty key support levels when it comes to, the Euro Aussie, the Euro New Zealand, even the Euro pound. So those I've briefly covered those, and I haven't talked a lot about the yen pairs, but the Euro yen, which looks vulnerable back down to the 131 level, and I think that's going to be pretty key support for the Euro yen going.
Okay, sure. I have the three charts. So, by the way, speaking of which, cable is also entering a critical support area. This 130 area, was support. Then it acted as a resistance when we began the recovery. So, why not? It might act as support once again here, right? So I'm monitoring that as well.
We are below the 38% retracement in the cable, so that's also a little bit of a risk. Hey, before I go, I just want to mention, if you haven't visited our sponsors with Forest Park FX, make sure you do so. If you don't get cash back rebates on your trades, you should probably look into it. I think that would make sense for any trader out there. And then also our start of season offer, it ends on Sunday, so make sure you guys take advantage of that. I tweeted about it. It's the best price that we offer all year long, because this is really the kickoff of the trading season from now until May. So we want to make sure that you guys are equipped with the best community out there, which would be, in our opinion, ForexAnalytix. So make sure you take advantage of this offer, and we'll see you in the chat rooms.
Yep, absolutely. And here's the investment program page. You can find here the Skype and the Skype contact and the email address. You can contact the guys at Forest Park FX. They're going to be very helpful in helping you find the ideal broker for the kind of trading you want to do. Now let's go back to the charts I want to cover. First of all, here's the cable that I just mentioned. So this is the zone I was talking about. This is the 130 zone. So I'm looking forward to seeing if it might actually produce some kind of support now on our way down. And it's going to tell me a lot about if the move higher, which most likely is corrective, but is it over yet? Because it's that's not like 100% guaranteed. I mean, yeah, we did find resistance at the 133 critical area, so that definitely points to a resumption lower. But 130 is important, and I want to see what happens from there. Now, having to do with other news, obviously the Italian news did affect it, but I was mentioning that 12,400 is this area is resistance in the DAX, and as you see, we got a major rejection today from there. It's already more than 1.5% lower in the day. So once again, that opens the 12,100 support area for a retest. As I was saying a few days ago, if we get rejected anywhere from here to up to 12,600, the possibility of actually crafting this head and shoulder formation that has a neckline at 11,800 is still open, right? So we've seen a decent recovery so far higher, but on the other hand, today's rejection is quite massive. So I don't think, as I was saying, at best you should be neutral here, because I don't think you can ignore the rejection we're getting today. You can't also ignore the fact that 11,800 is not that far away. So, and if we actually get the technical damage of breaking below that, I believe that, longs are going to start running for the exit, and that should trigger a bigger sell-off. So I'm still focusing a lot on the DAX because it's going to tell me a lot. And keep in mind that we're getting this rejection today, and at the same time, due to the risk off, we're also getting, this sell-off in the Euro USD. Usually, obviously, getting the Euro to move lower is something that helps positively the DAX. But of course, in this case, that both the moves get triggered due to risk aversion that's focused on the Eurozone, specifically Italy, and the jitters we had about that. Stelio, by the way, I don't know if you mentioned it. Do you want to tell us what was the final decision that they took and why the market is so spooked with that? I don't know if you're still here, by the way.
For Italy,
yes,
you mean?
Yes.
Yes. The question originally was the finance minister
about the deficit.
The deficit, yes. Finance Minister Tria was looking for a 1.6% of GDP deficit. The deputy prime ministers, the two prime ministers were Di Maio and I keep forgetting the other guy's name. Damn it. I'll remember it. They were saying 2.4%, and in the end, they got their way. Yes, and also Di Maio actually hinted that he said that even more than that wouldn't be a catastrophe or something like that. So they're hinting it might be even more. That's what the markets didn't like at all.
Yeah, that in essence they not only they got the 2.4% deficit, but from the statement they more or less set it as a floor instead of as a ceiling, right?
Yes. Yeah.
Okay, so yeah, makes sense, that we're getting this kind of a reaction, and obviously now that I was mentioning yesterday, I was still torn of what's going to happen from there. Having to do with the euro. I mean, I still believe that as long as we remain above this inverted head and shoulders neckline, there is still the possibility that we're going to find support at 116.50 and move higher. But the developments we had with Italy, I think that settled that from the technical perspective. I mean, this inverted head and shoulders formation has been now invalidated, which obviously shifts back the balance in respecting the prior trend, which is lower. So as long as 118 is holding, we have to respect the possibility that there is more downside. Now, of course, on the other hand, you can look at it in a different level, that besides this dip that we had lower here, we've already spent, from May to today, we've spent the vast majority of the time oscillating between 118 and 115.30. Okay, so with the exception of this move lower, with this false breakdown lower that we had, we've already spent several months trapped in a rather small range, considering how volatile the euro can be on occasion, and that's something to take into consideration here. Now, let me see if there was one more thing I wanted to mention, and then you can go on with the interview. Dale, who do we have today for an interview, by the way?
We have a ghost.
Ooh, should they be
Yeah,
spooked?
well, Halloween's only a month away, and we have ghosts. And ghost CFX. Brian's going to be with us. He's a FX trader, no axe to grind. He doesn't have a link to a website. So actually, our guest from Simple Trends, who showed that great silver chart, monthly COT, which, you also have working in your favor now, Stel. I mean, it's a record. Commercials have never been not short silver, and they're pretty close to neutral. It's a very unusual setup. So yeah, we have Brian. He's here and ready to go as soon as you wrap it up, Steve. And Steve, before you go, your take on the yen with it disconnecting from bonds. I was right about yields coming down, but wrong about the yen accelerating. I thought it would take out the previous high at 17, but wondering if you have any numbers up there where you think it might stop. Please, because my magnet's not working for me from yesterday where I was trying to drag it down.
Yeah, I will gladly have a look at it for you. Now, the next
Stel, I drag silver up with it, but it won't work.
Hey, I owe you. I owe you.
All right.
Next
all the way up 114.
Yeah, the next area of resistance I had here is 114. Why? Because it's the 127% extension of this corrective move lower. So 114.10 to be exact, is the next level of resistance, and after that it's 114.60. The 141.4, which is also, if you see, it more or less coincides with the general area that has produced these three highs that we had up there. So
kind of weird with what the bonds did this week, don't you think?
Oh yeah, but it's not that much surprising. If you remember, we have been talking for some time now about the fact that the USD yen has started showing more and more signs over time that it was like a faithful soldier almost forever, like going with the usual correlations that were always driving it. But the more time passes, the more we're seeing it rebel against some of them, and on occasion getting completely decoupled, right?
Yeah.
So
well, it was this week from both metals, because silver rallied. It was maybe right on gold, but separated from bonds this week, big time from the Fed, and I guess decided to become part of the FANG flight to safety trade.
Yeah, one comment here about the bonds. If you remember, we were talking about it like a couple of days ago, and I said that it looks to me like this is a triangle and we're headed to new lows, and the only bullish scenario I see is a double bottom. Now we have seen a decent rebound. I mean, we got a morning star formation here, if you see, which is a reversal signal. There's no question about it. But is it out of the woods yet? I mean, is that enough to actually like call this a double bottom? No, exactly. Not in a million years. Yeah. So we need to see a lot more to get convinced that this is anything more than just a reaction after another sell-off.
Thank you, buddy.
Okay. Enjoy the weekend, and don't forget these are your last few days, to get advantage of the offer. We'll be back here on Monday. Enjoy the interview, Dale.
Okay. Have a great weekend, Steve. You too, Stel. Have a good weekend, buddy. Brian, I'm going to pass you the controls, and you'll be the presenter. Looking forward to saying hello and meeting you, buddy. There's also a drop box for your volume. Okay. So you need to enable your mic and share your screen, Brian. Otherwise, you're really a ghost. Right now, you are a ghost. Looks like you went offline.
Yeah. I see that he's trying to reconnect, most probably.
Okay. We'll be patient.
I hope you don't mean pneumonia patient, right?
Oh yeah. You have to be patient with that too, I'm told.
Oh yeah, for sure.
Yeah, Amanda
sure.
said
you take it one day at a time. Yeah.
Yeah,
exactly.
Amanda said it'll take me 6 months at my age to recover from it. A 20-year-old could recover from it in a month. So I guess you
yeah, and an 8-year-old even faster than that, but that's how life is.
Yeah. A nice call on USD CAD today. Blake made it, right? He was buying CAD on that dip. You're very welcome.
No. Blake has been spot on the CAD.
I have a hard time, ma'am or sir, Pupalek, pronouncing your first name, Rabjean. I'm taking a guess, but you may want to consider, if you took it, or even if you didn't, become part of our trading family and sign up while prices are good this weekend. So Brian is still offline. Let me go to Twitter and see if he's trying to message me. Oh, let's see. Oh, it said it booted him off. Okay. Let me try it again.
So what do you guys make of Tesla? They're being charged, right?
I knew he would be. I knew he would be when he said that.
Anything else would be ridiculous, honestly.
What a great short it was that day. What a great short it was.
Yeah.
There were guys that came on and said that they called up the Bears when he did that and said, what are you going to do? And a lot of guys said, we're selling more on this. Yeah, so, okay, Brian, let's try it again, buddy. They're great looking cars, though, still. Oh, here we are. All right, here, Bitcoin.
All right.
But
am I working?
Brian, you're really an FX guy, so we've had quite a bit of coverage on Bitcoin this week. If you want to talk about it, that's fine. I noticed in your stream you do a lot of crypto, but kind of interested, if you can hear me, Brian. Can you hear me?
Yeah.
What your views are with King Dollar and the great week it's had here. Maybe we could go to your, I believe you probably, if you've been trading for a while, cut your teeth in FX. Am I right?
Yeah, FX is my main go-to market. Crypto is something I'm kind of playing around with the same method I use for FX.
Okay.
And it works 100%. And this is why I just wanted to kind of briefly show a few images on what I do before I go into the market.
Okay. Okay, sure. And before you get started, how long have you been trading, buddy?
This would be my almost 6 years.
Okay. And what was your life like before that? How did it happen for you that you got
I went to the military back in during the 9/11 time, and then moved to Nashville, Tennessee. Went to the Clarksville near Fort Campbell, opened up a local coffee shop, and it didn't do enough for me to keep it, so I got into FX through an Instagram post, which I went through many mentorship scammers for a year or two.
Did you find any good ones?
Oh,
They're
no.
not all scammers. No?
Oh, no. Yeah, it's stuff you could have like Google for free, and but no one taught me at the time, so I was self-taught. Same thing as Kumar, my friend. And,
right, Kumar, that's right.
Yeah. Yeah, so I met someone in the mentorship program. His brother was a Singapore central banker worker that was retired, and kind of went through mentorship through him over 3 years. And it was like the hardest education ever.
Yeah, I mean, why should it be easy?
It's not,
You know, and let me ask you this: you've been at it 6 years. How many years? You know, I've interviewed multiple people over the years. How many years did it take you to make a breakthrough and start becoming
I would say about
more consistent?
My first 4 years was very up and down, like maybe 60% success
You know,
rate.
that's the answer I get a lot from people that have made it. So it's really not much different than, you know, 4-year degree or being an apprentice electrician or carpenter, you know, right? So so it's hard, but you were lucky to find the guy.
Yeah. So the main reason is indicators. Indicators are provided on the MT4 platform or TradingView to make you fail and to limit your profits. Everyone gets stopped out for a reason, and this is the example I'm going to show you why that happens. And there's only 2 other people in the FX market that trade exactly like me, and those 2 are my mentors. And I teach locally.
Those two are what?
One is Michael Huddiston from Massachusetts.
Okay, I know.
And one is Traders Z on Twitter. That's his handle.
Yeah, Michael mentored Saeed.
Yeah, so those 2 are the only 2 that trade, you know, or I trade like them, more like. So it's not something easy, but it looks very simple.
Okay. Yeah, you guys trade naked, and I always recommend people that trade naked keep the shades drawn.
Yes, because it avoids the drawdown. You know,
and you don't want people to see you trading naked.
Yes. Yeah.
All right. Go ahead, buddy.
All right. How do I minimize? Okay, there. All right. So in this example, just imagine this is any other, you know, FX chart because it looks exactly the same. This is on a 5-minute time frame, and I lay out all the direction moves exactly to the detail. If you look at the middle, it says FYI, this move will happen really fast, resulting in a wick on a candle closure. So the rectangle boxes are indicating where the stop losses are hiding. Anywhere that's equal highs or equal lows, or anywhere in the consolidation on a wedge or triangle pattern, it always
obvious swing highs and lows.
Yes, it always goes up before the down move continuation. So the highest point is right in the middle. The most nearest point is where the red circle is, where I noted there, right? Yes. Clearly you see 1, 2, 3 clear highs, right? So I'm gonna move to the next image, if I can. Oh. All right, so notice there where you see the arrow, it does not clear out the very high rectangle, but it clears out the all 3 equal highs. So it will not go down before taking out the last one, right? It's got to clear everyone out. And there, it clears it out.
That mean Mr. Market's always shaking out people before the move they're looking for happens.
So that's why I encourage, there's a lot of psychological aspect in trading. Very emotional. A lot of people like to chase the fast moves, and it's equivalent to where you go to the casinos. There's algorithmic studies for gamblers that go to casinos. It always works. You know, they always go to the ATM, withdraw more money. It's the same thing in the FX market. You lose more. What do? You reinvest or re-enter because you want to make up your losses. It's the same concept. It makes you chase. It's very emotional. Sometimes it does double fake moves, right? And that's where the indicators is a holdback for a lot of traders. It always stops them out. And they re-enter. And then what happens in New York session after London session, economic news pops right back up and knocks your stop loss out for going down to the main direction. So the last stop loss.
Let me ask you something, Brian. And I'm not doubting your success, but does your strategy fail you at times?
Oh yes. Right now it's at a 10-year reversal on every market. You can see, Bitcoin is getting close to that 5,000 mark before the reversal. You can see the gold. I can show you the charting on that, where it finally hit a pivotal mark to go back up on a 4,000 pip range. Dollar yen, same thing.
Okay.
Euro USD, Pound USD, all the majors, they're all at a reversal point, and a lot of people, I'm sure, went up and down, you know, because the reversal time frame on a daily or weekly takes longer to form that reversal pattern before it continues on.
So this rally in the dollar, you'd be fading, and gold at 1181, which was 61.8 back of that first rally, is a buy in your view and your work?
Yes. So determining that conclusion, I use order blocks. So order blocks is the down candle before the impulse up move. So I'm going to use that as a reference point for it to reject and continue to bounce in the same direction.
So we're looking at a monthly here, right?
Yes, I trade off of monthly, weekly, just like the banks. That's how I was trained.
All right, beautiful. So you're kind of an astronomer, like a Galileo,
Yes.
rather than most people using their microscope or magnifying glass that get whipped around.
Yeah.
Okay.
So as you can see on weekly, the peak that came, you know, in the beginning of the year, it looked very confusing to a lot of people. You know, it went sideways, accumulated, and it distributed. So this
a lot of people were looking for a breakout back then. That would have taken it much higher. Okay.
Yeah. So this pattern is the first break out of the consolidation, out of the first peak, right there.
Right.
So whenever I see a down move and an up move, the next candle should blow through below, but it didn't. That indicated me it was a consolidation of a 5-wave, you know, correction for most daily wave traders. So it would be 1, 2, 3, 4, and then the following week. That candle right here knocked out all 3 weeks prior stop loss.
Yeah,
and it's targeting that low, right?
Yeah.
So as it moves down there, this is my 389 pip move, which is awesome. And it happened on a Friday. Usually the weekly range is very low, but I think Canada or Canadian and dollar gold pairs, they move pretty good on Fridays. So how do I determine how far it's going to go? It's a lot of indicator traders, they don't know how far it's going to go. They just, you know, take their profit safely and re-enter at at another time. So a lot of fib traders will know exactly how far it will go. So I have a custom fib. Can't really share that, but I'll show you the level where this is the last low right here. So
what about that spike in Asia at 1160? Was that like 88.3 back or something like that? The whole move. Yeah, 1160
yes, this is the clear rejection of the buy order block on the weekly candle, which is right here.
Yeah, it wasn't clear when it was happening, but I do recall the day. And the bottom was in Asia. Asia, which was kind of unusual that Asia would come in and they'd turn it there. So, okay. So you think that's 1180? So you'd be long at the 1180 level?
Yes.
Okay, and you're wrong under 1160, like everyone else, or what?
Yes.
Long or wrong before that?
Long down here, and then
wrong down there.
Yeah, long.
Oh, long.
So going long.
Okay, so you're looking for a new low in gold first.
No. This is the lowest. It's not gonna go any lower.
Okay, so you'd be a buyer down there right here at 1180, or are you waiting for more weakness?
Oh, I sold yesterday on a movement down from here to here, take out that low.
Yeah, you're getting a reversal today. Yeah.
Yes. So if you look at the area here, there's no other stop loss for money or liquidity resting at the bottom side.
Mm-hmm.
So if I were to use a fib tool from here to here, right? That lines up exactly at the 78.6 retracement. All right, clearly rejected on a daily candle. If this is going up, then dollars should be starting to get weaker, as it should come down starting next week.
So that's your correlation.
Yes, I do many correlations. So gold correlation, I use dollar Swiss and Aussie dollar for negative and positive correlation.
Okay.
Yeah, so money on the top side is still resting on let's see, 12, 14, 45. Downside is clear, so there's no reason for it to go down anymore. So if you look at the reversal patterns, this would be a potential, I don't know, what do you call it? W forming on a long term. I don't know.
Okay.
Yeah.
Higher low. Actually, yeah, it was 61.8 back today, 1181.
Yeah.
I was looking for that low. Okay.
My first target will be at 1240.
Okay.
Yeah,
that would be a quality off the first rally, right?
Yes. And that will clear out all the near-term liquidity levels on these ugly highs, equal highs, and long red candle, and a sell order block right on that candle. And that's where it should first reject before we're going higher. So on a higher term, going back on a monthly, this first move up here and retracement that completed the market structure break or a trend shift, or whatever you want to call it. As it rejected on the next order block, which I mentioned before, if you draw the extension levels from the swing, the range from here to here would be the first area to stop, would be that neck line on the peak. All right. So you can look at it different ways, but I use the order block versus support and resistance levels. I don't use any trend lines or anything like that because all the wicks and everything inclusive on a shorter time frame, I use every data. So that lines up a lot better.
1600.
So the range, so the range from here to here is about 4,042 pips. So a lot of position traders, they may hold it, but the retail traders, they'll probably enter on a buy, pull back to a buy, so it'll accumulate to more than 10,000 pips.
Okay. Nice look. And you were saying you thought the yen might be peaking.
Yeah, so dollar yen.
Had a pretty good week. Pretty good week.
Yes, I was looking at one of your guys' live yesterday. I encourage a lot of my students do not use indicators for that purpose, because indicators, you're relying on signals mainly, right? You're dependent on what the RSI, moving average is. It has to close on a candle closure, so you're drawing there. Right?
Okay. So this looks like a short to you, Brian? I think we may have lost you.
On a month.
Oh, there you are. You're breaking up on me, buddy. Maybe it's your internet connection. We'll wait. You there, Brian? He got booted off again. He's offline again. All right, well, tell you what, guys, you could tell Brian's very good. If you want to follow him, it's at Ghost C Charlie FX. I don't know if he's going to be back. Only had about 8 minutes left. He doesn't have a website, so check him out and say thank you. And we'll wrap that up. Hope everyone had a good week. Remember, if you're looking for a place to have an account, you're not happy, or you want to have multiple accounts, get a hold of Trent, Justin at Forest Park FX. Okay, and don't forget, this is the best weekend for the rest of the year to become a part of our trading community. So look forward to working with everyone. See you in October. And most of all, remember, everyone, don't just count your pips, count your blessings. And we'll see everyone on Monday. Enjoy. Adios, Warriors.